Good afternoon, and thank you for joining me for another office hours training. I am Crystal L. Gunn, your financial strategist, life insurance advisor, and small business advisor. And part of my job as that strategist, be it on the business side or on the personal side, or if we're talking about life insurance, right, is to help you create a solid financial relationship, helping you heal and redefine your personal financial relationship, and also helping you to create a strong business base or foundation for which you can grow. I also, through education, examples, storytelling, help you to have some aha moments, holding up that mirror to you so that you can have some self-discovery moments and help you see what no longer serves you so that you can release them and soar, right? And all of that helps with the breakthroughs. That's where you start to shift. That's where you start to heal. That's where your magic happens, be it in your personal finances or your overall business. And I know someone's saying, well, Crystal, what does healing and all of that have to do with my financial relationship? Your financial relationship wasn't defined by you. It doesn't work in your favor. It was defined by what you heard, what you inherited generationally. And I'm not talking about assets. It was defined by what you saw growing up, what you were told, what you weren't told, and what you overheard. It was defined by what you were taught and what you weren't taught. And then as you went through life, it's been defined by trauma. It's been defined by you trying to be a cool kid. It's been defined by what was happening in your high school when it came to what other children had and what you did not have, or the perception that you wanted to leave and wanted people to think about you. It has been defined by your friends, your family, how they operate with money, what you see, and how they talk or don't talk about money. It has been defined by your traumas, who let you down. So now you're this independent person. It's been defined by social media, by commercials, by music, by television. It's been defined by the bullshit bar, which is ever moving and unattainable, depression causing, and self hate evoking bullshit bar. It's been defined outside of you and it doesn't serve you. So, the biggest part of what I do is help you to redefine it and heal it so that it works for you and it works for the generations that follow you, right? And I told you all on Thursday, all of August was going to be dedicated to life insurance because it's so very, very important. And in too many instances in our community, we're lacking it in general, or we are adequately under or woefully under insured, right? So Monday, so with talking about life insurance, I wanted to start with some misconceptions. Why do they exist in some instances, and educate you a little on life insurance, show you how it can be affordable, and we can connect to get you adequate coverage. And Monday, I started with the misconception of life insurance, with the first misconception being that life insurance is expensive. It can be, but it also can be extremely affordable. And we have to stop listening to what other people say based on their own personal experience and get the knowledge and the experience for yourself. The second one, which we talked about yesterday, was life insurance is only for older people. A huge misconception. Go back and watch both those episodes. And if you come in on, sometime throughout this month, I encourage you to go back and find other videos that speak to your soul, but specifically go back and watch these videos in the month of August as I'm talking about life insurance, right? And so the third misconception that I want to talk about today is employer provided insurance is enough. And I always say if you only have employer provided insurance, that don't count. Right? It's better than nothing. But what happens when you leave that employer, whether it is your will or their will, right? Most people never question if they can take that insurance with them. So the moment they no longer work for that employer, now they have no insurance. And let's say, even if you're leaving an employer to go to another one and you have a job, you leave on Friday, you start a new job on Monday. Typically, there's that 90-day process before you can get any benefits in that new employer with that new employer, right? We don't think about that piece, right? And so, yeah, it's better than nothing, but you have to look at the overall picture of why you have insurance, life insurance, and what you're trying to provide when you have that life insurance, right? So typically, employer provided insurance offers coverage that is 1 or 2 times your annual salary. I haven't seen that with anybody in a long period of time. Typically, I'm saying, and I'm talking about your average worker. I'm not talking about C-suite workers, right? Just your average worker, mid-level management. It might be $25,000, $50,000, $75,000 if you're lucky, right? And it's just not enough. Like, it's just not enough when you think about all of the things and all of the uses for life insurance. So let's talk about this. Let's just say it's $100,000 policy that they give you. Right, mine. Before I retired a few years ago, I made over 6 figures, but the insurance that they provided me was not. It wasn't a 6-figure policy. Do you get what I'm saying? So, and let's just say it's $100,000, right? Let's say it's $100,000 and you make $50,000 a year right now. And you have a child or two, right? And a spouse, or not even a spouse. But if you're trying to replace your income because your income matters, it's only going to last for 2 years, perhaps, right? If they, and that's if you're getting $100,000 policy. If you make 50, I can almost guarantee you're not getting a $50,000 policy. You might get 25, right? You might get 50. So that's 1 year that your income that was going towards that household will be provided, right? And again, it's just not enough. And so when you think about what happens to your family if you're no longer here, right? Let's step outside of the emotional side of it and just look at the financial side of it. How does your income leaving impact that household? How does your income leaving, and it's not just about that year, it's through the life of that child, let's just say. How does that impact your child for the next however many years? So you have to start thinking about it in a bigger way of it just being a death benefit. But even if it is just the, you know, that death benefit being that 25 or $50,000, is it adequate enough to do for your family what you needed to do after you're gone? Again, it's better than nothing, but it shouldn't be the only. So that's the minimum coverage that you should have. And don't make your minimum your maximum, right? So let's look at it another way. So typically, that life insurance policy through your employer is going to be a term policy, right? So there's no way you can build any type of cash value for it. There's no way that you can come back and borrow against it, right? Where you can do that with other type policies, you can't. You know what I mean? Let's say you have a mortgage, you and you have a grown child that lives with you. Um, What happens if you die and that grown child can't pay that mortgage payment, right? Does that 25 or 50 or $100,000 cover even that mortgage payment? Like, you have to think through the process of, and I know it's hard. I know we don't like to think about our own, you know, us, our own death. I know we don't like to think about that. I know we don't even like to have conversations with that. Yesterday, I talked about a lady who I met at an event, and she wanted life insurance for her very young grandkid, her two grandkids who were under the age of 10, and she wanted to get insurance for them because her daughter, the mother of those two children, won't even have a conversation with her about life insurance. Doesn't want to talk about it, doesn't want to talk about it for herself, doesn't want to talk about it for her children, doesn't want to talk about it for the lady who I was there, which would have been this lady's mom. She just doesn't want to talk about it. And so she was like, I know if she won't talk about it, then I have to make sure that those children have something. I have to make sure that I have coverage for my on the grown daughter in case something happens to the grown daughter. So I know we don't like to talk about it, but we got to talk about it. Like, we need to have one really good conversation about it, get the policies in place, and then, you know, it might be something that you come back and you visit once a month. I mean, not once a month, once a year or twice a year with your loved ones, because you got to go back and look. You might want beneficiaries to change. Some things may have happened in your life. So it's a really, really, really important issue. And I can't stress that enough, right? And so that employer provided insurance policy, I always say it doesn't count. Or it's better than having nothing, but I look at it as the and one, the extra point, right? You have adequate coverage outside of work. And if something happens to you and you still have this $25,000 policy at work through your job, that's just extra that your family can get. That's a bonus. But that minimum should not be your maximum. You get it? So, misconception number 3, employer provided insurance is enough. It's not enough. When you start to think about what you want to see for your family 5 years after you're gone, 10 years after you're gone, for the next generation, you think that little $50,000 policy from your job is enough? Or that $100,000 policy from your job is enough? It's not, right? I I had uh, a banker refer someone to me just for overall financial strategy because her spouse unexpectedly died. They had 1 or 2 children, I don't remember. But her spouse unexpectedly died, and he did have some insurance, and then they had some policies too. And I don't know, when she talked to the insurance company, she could have cashed in her policies and the policies that she had on her children. She would have wound up having like $400,000, right? Now she was a stay-at-home mom. She didn't work. And she wanted to buy a house because they were renting. She wanted to buy a house. And of course, when she started talking about wanting to buy a house, it was $250,000, $300,000 house. And I had to ask her, I said, okay, well, you don't work. And that's fine if you buy this $200,000, $300,000, policy, but you have to look past that. Who's going to pay those monthly bills? Who's going to do all of the stuff associated with this? $400,000, especially when you spend 250 to 300 of it, is gone like that. So we have to just start thinking. And she, it was good that he had some coverage, right? But again, was it enough to make sure? And I don't think that they had talked about, well, what happens when I am gone? What would you want to do? Okay, well, I would want to buy a house because we're renting. Okay, well, we would definitely want to cash something out. Okay, well, now we need to make sure, especially if we have young kids, that you still get to stay home let's say for 3 or 4 years or 5 years or whatever. Well, we need to make sure there's enough money in the benefit, uh in the pro in the that you're getting, that the beneficiaries are getting, in order to be able to set that money aside and grow, in order to be able to do that. So it's a process, and you got to think it through. You got to figure out what is it that you want to do, and how is it that you want your family to benefit, right? They are the beneficiaries from this policy. And oftentimes we think about it, and I've heard people say, well, I don't want somebody benefiting from my death. So you just want them to be in pain after your death. You don't, and then you want them to try to figure out how to replace your income, and how to, like, it's I get it, but it's also part of the healing and understanding that there wasn't a huge value put on just financial planning in general when you look at the historical context of the thing, from slavery and not being able to earn revenue for the labor that you put out. And so there was no money being made. That means there was no money to save. That means there was no money to budget. That means there was no reason to talk about financial planning. You didn't have access to that. So somewhere along the way, the value of it has not been coded in your DNA. That other stuff has been. But the value of having it and being able to use it as a tool and a resource has not been learned or understood. And so we don't do it, right? So misconception number 3, employer provided insurance is enough. It's not. Now, do me a favor. Pull up your current policy and double check your beneficiaries, whether it's the policies that you have at home or if it's that employer provided policy only. But check your beneficiaries. You don't have, so there's space for a primary beneficiary and a secondary beneficiary. You can have more than one primary. You don't have to. You can have more than one primary, or you can have a primary and a secondary. You need to have at least 2, right? And on at least a yearly basis, you need to go back and you need to check these beneficiaries, right? And the reason that you need to do that is, I tell you a story, was actually talking to a client, and a family member of hers went on vacation and did not return. She was young. She was under 30, under 35. And she had that life insurance policy. She did have a life insurance policy. She had one beneficiary. The beneficiary on her life insurance policy was her mother. The problem is her mother died a year prior. So when she died and the family could get to the policy, they couldn't get to the death benefit of the policy because there was one beneficiary who had died a year earlier. So the time when the family needed that money the most, they couldn't get it because now the policy had become part of the estate, which meant it had to go through probate. And that's not something that happens overnight, right? So pull out your policies and check your beneficiaries. You need to have at least 2. They don't both need to be the primary, but you need at least an additional beneficiary, because if you haven't updated it and changed it and that primary dies before you do, there needs to be a secondary that can then get at that money. They can bury you and can do whatever else your wishes were. The other thing is ensure and double check that your children under 18 are not the beneficiaries. I see it all of the time. You want to make sure you're not trying to leave $150,000 to a child. You can't do it. They can't get at it. Okay? So pull up your current policies and double check your beneficiaries. And remember, life insurance is a necessity, y'all. It's not an option. It's a necessity, right? Just like you need air to breathe, it's a necessity. And so when I talk about getting your financial house in order, life insurance is part of that. Leaving your loved ones without your income or trying to figure out how to pay for your funeral, it's irresponsible. And so when you talk about you love your family, the least you can do is have adequate life insurance coverage, right? When we talk about the 2053 prediction of Blacks having zero wealth, getting your financial house in order is how we ensure that that prediction doesn't become a reality. And part of getting your house in order is having adequate life insurance, right? And 2053 is only 29 years away. So we can't wait until 2050 to start working on our finances. We can't even wait until 2025 in reality to start working on our finances. We have to start today, okay? So we talk about building generational wealth. How are you going to do that? Life insurance is a tool, is one of the tools in order for you to be able to do that. And we talk about breaking generational curses. The curse is going to stop with you. Then the new system of success must start with you. You have to get the tools in order to create those new systems of success in order to pass down that generational wealth, right? So what's my favorite thing for today? Y'all already know it's going to be it for the whole month of August. Life insurance, right? And getting your financial house in order is a process. It's not something that you're going to wake up and you're going to do in one day, right? It in itself is a journey, right? But it's a journey that is so freaking worth it. I promise you, it is a journey that is so worth it. Getting your financial house in order is a journey that is worth it, right? So what are we going to do today? Complete the life insurance calculator to see how much coverage you should have. Go back and look at your coverage through your employer. So you know, some people don't even know how much insurance they have through their employer. They know it's a benefit, but they didn't read their whole benefits package. They don't even know how much insurance they have through their employer. So complete the life insurance calculator to see. The link is in the description. Complete that to determine how much life insurance coverage you actually need. It's only a few questions. It'll take you less than 60 seconds. And then schedule a free consultation with me and let's discuss the options. Again, it doesn't matter where you are in the US. Let's schedule a consultation. Let's talk about it. That link is also in the description below. And then we're going to fill in the gaps. We're going to talk about it, strategy, fill in the gaps, what it is that you want. How do you want to do it? Do you have children? What do you need? There's some things that I'm just going to give you some information and some ideas on. At the end of the day, it's up to you, but I'm going to suggest things and amounts based on what you're telling me, right? Yep, we see what that calculator says you should have, but now what type of policies we get and all of that, we're going to talk through that process and get you what you need and also get your children insured so that they can use that life insurance as a tool as well. Okay. We don't have no more time. I'm not even going to stay on this for a long time. The trouble is you think you have time. You don't. Like, it's necessary and it's important. And when we talk about redefining our personal financial relationships and getting our financial houses in order, there is no time to wait. We got to start doing it today. So if the information has been helpful to you, please, please, please subscribe to the channel and also share this information. Like, share the information. Don't be the gatekeeper to the good information. Share the information. You never know what somebody else is in need of, what they've been looking for. It could be the right thing. They may have just been having this conversation with somebody yesterday and they get this video from you and they're like, oh, okay, this is confirmation that is the thing that I need to do. So share this information with other people. Don't be the gatekeeper. We collectively, when I say we collectively, I mean Black folks, right? We have to get our own individual houses in order, heal and redefine our personal financial relationships in order to stop that 2053 prediction of Blacks having zero wealth from becoming a reality. And always, always remember to give yourself some grace. You don't know what you don't know, which then also means you don't know what questions to ask. Get the information, right? Step up and get the information. Find value in that so that you can so that you can stop those generational curses, so that you can build some wealth in this time and pass that generational wealth down to the generations that follow you. Keep striving for your next level of success. You are not in competition with anybody. This is about you and your elevation, and then what you're going to do for the generations that follow you, and never, ever, ever give up on you. Invest in you. Stop looking at these things as expenses and look at them as an investment that absolutely will positively pay off. So always, always invest in you. It is the best investment that you will ever make. And I promise you, you will not regret it. Thank you so much for joining me today. I will see you on the other side.